So let me show you an example of how I used moving averages to make a little wad of cash a couple weeks ago. Here you see the daily chart of a company that probably every single one of us uses, Visa. Notice over the past year that the green 50 and on occasion the red 200 moving averages have repeatedly served as support for Visa. On January 15th, this is what the chart looked like. Visa had declined from a high of around 220 down to right at its 200 red moving average, as you can see here, which is right around 200. Based on what I just showed you in Aflac and Coca-Cola charts, and based on what you're seeing here in this chart of Visa, what do you think Visa will do? Go up, go down, or go sideways? Now I know we don't know this with 100% certainty, but what is the most likely scenario that will happen to Visa stock? Maybe you came to the same conclusion that I did on January 15th. I believed it would stop declining, either hang out where it was at, resting right on the support level of the red 200 moving average, or maybe even bounce off the red 200 moving average and go up in price. Here's the option trade that we did. As you can see here, we sold the February 19th 195 put option and received $4.15 per share. In case you don't trade options, by selling a put option, we had a bullish position on in Visa. We expected it to stay where it was, or maybe even increase in price. I did not expect it to go down in price. Well, what happened? As you can see here on the far right, we have now fast forwarded to today, February 6th. You see that Visa did continue to come down and decline just below the moving averages, but the moving average held and Visa proceeded to increase in price by $15 over the next 4 days. On February 5th, with Visa trading right at $210 per share, that short put option that we sold for $4.15 was then only worth 40 cents. So as you can see on the screen, we bought that option back to close it out. This position ended up paying us a 33.4% annualized non-leveraged cash on cash return.